Hello, everybody, and thank you very much for joining me today. It's Allan Laboucan with the Rocks and Stocks News website. Today we have a special guest for those that like copper projects. It's Joey Fries from Candente Copper. Today they had a very important preliminary economic assessment out that we're going to talk about. Before I get into that, I just wanted to mention how undervalued I think the company is. Right now, their valuation is trading at about, let's say, 6% of their NPV based on this preliminary economic assessment. One of the recent takeovers was at about 30% of their NPV. So I think you'll see why I think this is such an undervalued situation and ripe for a better valuation. Joey, thank you very much for joining us today.
Well, thank you for inviting me and hosting me.
Well, last time we talked about a week ago, you said this with PEA was imminent, but you weren't sure how imminent. It seems like it, in fact, was imminent.
No, it's crazy because people always say, when will you release the results? And I always tell them, when I have them. But, it takes a lot of iterations. There's so many engineers involved in this process. So just trying to write the summary was what I call it, the news release. It really takes a lot of input from many people to make sure we have it, that all the numbers are locked in, I should say, right?
And that speaks to the quality of the work that you're doing.
Yeah, I agree. Yeah.
Okay, so I'm not going to steal your thunder. You go ahead and talk about the highlights of this from your perspective, Joey.
Okay, great. Thank you. Well, we have a project that is easier to finance, so a lower capex, start up small, 40,000 tons per day. But at the end of the day, it still has a 28-year mine life. So we will be, the idea with the PEA is start as 40,000 tons per day. Once you have payback, then ramp up to 80,000 tons per day. So life of mine, it's still, average 173 million pounds of copper a year over 28 years. So it's still a very good producer. And it just opens up opportunities really for who can build this. Now, that's not to say that the old study, somebody wouldn't want to follow many aspects of that. Of course, the throughput, that was 95,000 tons per day. There's no reason that this resource can't still support that. I'm not allowed to speak to the economics of it. I could mention that we assume that the $1.56 billion capex from those years probably had gone up to about $2 billion. But then again, you wouldn't be using a 250 copper anymore as your base case, which is what we used in those days. So the point I'm trying to make is a bigger company or anybody really could still be building this as a bigger project with much larger throughput from the get-go, from the start. But we wanted an opportunity to start the project with a smaller capex, so that, as I say, it just opens the arena for who can potentially be building this, be financing it. And then in addition to that, very important to us, as we mentioned when we did the desktop study and then embarked on the PEA, was ESG, environmental, social, and governance. Now, early on, I should say over the years, but early on in this study, one of my second, or I say the company's desire was if we could mitigate the need for a roaster, which was for the arsenic. And what we discovered is that was identified in 2011 as, making clean con and good technology. The arsenic's is precipitated out as scorodite, which is an inert mineral, so no problems with that. Environmentally sound, actually. But really, it was built and it was being commissioned by Codelco and other people that had projects that were more like 4% arsenic, and we only had 1% on average that we understood. So could we get rid of that? Well, we have, and we've got a very marketable con. It's 0.49% arsenic for the first 6 years and 0.51% life of mine. And a lot of that is because the arsenic was not distributed evenly, and so it allowed, once we understood that on a geometallurgical model, it allows for in-pit blending, and then it allows for paying penalties in some aspects, and also it doesn't report to the con evenly or as expected. In 2011, the studies indicated that it would report 85% of the arsenic would report to the con. Well, in fact, now we know it's more like 35%. And so that's quite a surprise to a lot of people, that we don't need any mitigation method for the arsenic. We'll pay a few penalties, but when you're right about 0.5%, your penalties are not extreme. So,
One thing that stood out to me, Joey, was at 350 copper, you're looking at, what was it, a little over 16% internal rate of return.
16.3.
So there's a good sensitivity to the price of copper. If copper is right now, 450-ish, lots of people in the big analysts are talking about $5 plus copper. I think that's inevitable. So all of that is gravy.
Exactly, at only 450 copper, which is almost where we are today, the IRR goes up to 21.9%, and the NPV
Wow.
goes to 1.83.
Do you know what it is at $5 copper?
Yeah, I've got a chart here.
Bien, muy bien. Very good.
And this is all after tax too, by the way. So
Okay.
using the 8% discount, it's 2.2 billion NPV, IRR 24.4%.
So at $5 copper, it almost triples your NPV. Am I getting that right?
Or Capex, you mean?
Oh, sorry. So how would that affect your NPV at
No, the NPV is 2.2
two
using
point?
at $5 copper. NPV is using the 8% discount still.
So
And that's
that doubles.
not changing the gold or silver. So it's more than double. Yeah.
Wow. And that really juices up the IRR.
Yes, it does. Yeah. Yep.
So I guess if a major was interested in buying this, they probably are using numbers much more higher than what you're using in your preliminary economic assessment.
Well, 350 copper is considered standard use these days for a base case. So that's, minimum price of copper that people consider to be long term. But what majors use when they're deciding to buy assets, I really couldn't comment.
Well, I think we can use that previous valuation that I talked about. And the name of the company escapes me at the moment, but they paid 30% of the NPV. So obviously, they think there's a higher price of copper coming.
Yeah.
I think that's fair to say. Okay, well, so let's get on to some of the highlights. As you said, 173 million pounds of copper production over 28 years. That's annual production.
Yeah.
The project is owned 100% by Candente. Initial capex of 1.04 billion based on 40,000 tons per day. Mine and plant expansion to 80,000 tons in year 7, with an additional capex of 305 million. So, by year 7, you would have looked after all of your costs to get it into production, and then cover the cost of to upgrade it.
Yes, correct.
Okay, cash operating costs of $1.28 per pound, including all offsite and on-site costs, treatment and refining net of byproduct credits.
Yeah, that's a nice low cash cost, right?
Yeah, exactly. And that's another thing that the majors want, is they want those long life mines that are low cost.
Exactly.
Advanced ESG, We talked about that. Waste to mineralized material strip ratio of
If you don't,
0.66 to 1.
if you don't mind, what we didn't talk about on the ESG yet is the new idea for commingling and co-placement of waste and tailings. So a lot of, our earlier plan and a lot of mines, um, over the years, I'm not going to say old mines, but in the last 10, 20 years, would place your tailings and your waste separately because one is wet and one is dry. But in this idea, they're actually together. So you are drying your tailings, you're filtering them, but you're commingling. So put it some waste, then also commingle so they're mixed up, which takes less space because they're different size fractions. So they can, sit
And
inside.
also removes the potential of a wet tailings
Well,
potential.
exactly. The end result is what, the commonly known as dry stack, which is much more stable than wet, of course. Yeah.
Okay. Waste to strip ratio 0.66 to 1.
Yeah. Isn't that nice?
Wow. So not a lot of strip to worry about where you're moving a lot of material to get the good stuff.
Yeah. There's a chart showing that in the earlier years there is some significant strip, but as the life of the mine goes on, it gets very minimal.
Which makes sense. You're getting down to the mineralized material.
Yeah, but also that means that your lower grade material on the outer edges of your deposit can be economic for many years, right?
Okay, another key point here, after-tax NPV of 1.010 million or billion from a base case of 350-pound copper, 1,650 an ounce gold, US 2150 an ounce silver, and that's at an 8% discount.
Correct.
And that's pretty industry standard these days to use an 8% discount, Joey?
Yeah. Yes, it is. Yeah.
So we already talked about the after-tax IRR of 16.3% for a base case at 350 copper, and very sensitive to the price of copper. Basically, anything above 350 is just adds to that IRR.
Correct.
After-tax NPV increases to 1.8 billion with an IRR of 21% and payback of 4.5 years when using copper price of 450. That's got to be something that majors are pretty excited about.
I certainly would think so as well. Yep.
As I said, it's highly leveraged to the copper price, and you made a note of that in your highlights. Life of mine, metal production, 4.8 billion, 879,000 ounces of gold and 19 million ounces of silver.
Correct.
Annual metal production, 100. My gosh, Joey, there's just a litany of highlights in this news release.
Yes, it's a pretty detailed news release, but it should keep people, busy understanding, digesting until we get
Yes.
a technical report out. So there's a lot of information in this news release alone. Yeah.
Well, let me see if I can pick a couple out here that, average life of mine metal recoveries, 88.1% to copper, 64% to gold, and 57.2% to silver.
Yeah.
Any possibility to increase those numbers, Joey?
It's not mentioned in the opportunities, but certainly no reason. I mean, I'd rather just live with what we have right now because I think it's fantastic. But
Yes.
sure, technology can be worked on and recoveries can be worked on. Absolutely.
And that's something, would that be something you would look more at in a feasibility study?
Oh, yes, absolutely. Yeah, the feasibility will do more met testing. Yes.
Your concentrate grades are forecast to average approximately 26% copper, 3.63 grams of gold, and 84.16 grams of silver for first 6 years.
Yeah.
Life of mine concentrate grades projected to be approximately pretty much the same. A little bit less on your gold and your copper.
Silver.
Or sorry, silver and gold.
It's
That's why I
okay.
have you here, Joey. You straighten me out.
I can help you read it. Yeah.
Yeah, there you go. I'm sure a lot of people are going through this. I'm just dealing with the highlights here. Um, Another important point, conventional crush, grind, and flotation technology. This isn't a complicated flow sheet.
Very true. Yeah, exactly.
And that's extremely important, right, Joey?
Yes. Yeah, it sure is.
As you always talk about, I think this was an important point for you and your team. Decreased OPEX with marketable concentrate with no need for arsenic treatment.
Correct.
So that's really helpful on the bottom line.
Yeah, and that's really good that's with the smaller startup or with the, a higher throughput as well. Our mastering, the geometallurgical modeling, mastering of the arsenic that's in the ore body, that works for any size of operation.
Okay. Now you also mentioned pre-production capital cost of 1.04 billion is based on leased mining equipment and includes a contingency allocation of 18.5%. Now, for a junior mining company, that sounds like a big number. But for the average mine these days of something that is significant as Canariaco, that's right in line with what it costs you to build a mine these days.
Yes, it is. And for this kind of a mine life and annual production and life of mine production, I think it's a very good number.
You got to be right in the same ballpark as most big mines these days.
Well, big mines that want to start small and expand later, absolutely. Yeah.
Yeah, like I mean, it can go up to 4 or 5 billion, but you're talking about a lot larger operation.
Yeah, lot larger startup and probably life of mine too. Yeah.
Okay. All-in capital cost of 1.57 billion based on leased mining equipment and including life of mine sustaining capital, expansion capital, and closure costs. Now, you've mentioned that a couple times, the leased mining equipment, Joey. Does it help if you purchase the economics?
It can help the long-term economics, but it's harder on your capex. So it's harder on the first few years. So most companies like us would plan on leasing for sure. But
Now, would a
but if
major lease or would they buy? I guess it depends on what they have going on around there.
exactly, they could very well decide to buy, and
And
easily
your big,
handle the
one of
larger.
your, sorry?
They would easily handle the larger capex.
And one of your big shareholders has operations in the area. Am I getting that correct or am I off on that, Joey?
Fortescue, no, they don't have any operations in Peru yet.
Okay, so it would either be leased or owned if they were if they became the developers.
Yes, and to be honest, they might prefer to start at 95,000 tons per day or even higher. In feasibility, we did look at 110,000 tons per day, but I can't speak to the economics of that. But yeah, they could potentially prefer that. I like the idea of starting smaller for the lower capex for us, obviously, but also for the permitting. I think given our we'll be the first mine in Lambayeque,
Uh,
but that's okay.
right.
I mean, there's just many options with this project. That's the main thing for me, for us.
Now, another point, 28-year mine life with potential for extension if additional resources is identified below proposed pit can be included in a mine plan. So that's in the ballpark of what the majors look for. But you also have not just below the pit, you also have around there the potential for additional resources.
Yes, and we were able to recently come up with an initial, we call it inferred resource at Cañariaco Sur based on the first 15 holes. We haven't drilled off the ore body, or I should, excuse me, we haven't drilled off the deposit yet. So we don't know how big and what could change in the grade. So, but already we've got 2.2 billion pounds of copper there and a million ounces, a little over a million ounces of gold, using the same cutoff as Norte, the 0.15. So absolutely, we have lots of opportunity for additional resources, additional years of mine life. Yeah.
And that's certainly not insignificant, because that's about 25% of the size of Sur, with a little bit enrichment in gold.
Correct. And it has very low arsenic, and it has higher gold, and it has moly. We don't have moly at Norte either. So it's got a lot of opportunities, whether it be, well, let's assume it would be added to Norte. So you'd start with Norte, and then you'd have extra mill feed coming with the higher gold and no arsenic and some moly. So just adds a lot of potential, economic potential here.
Now, this next point is an important one that I think that when you're looking at projects in South America, you certainly have to pay attention to the elevation. And your highlight is that located at a moderate elevation, with the pit centroid and process plant at approximately 3,000 meters above sea level.
Correct. And
so to put that into context, Joey, what elevation are some of the big mines down there operating at?
Well, you can speak about Antamina and Yanacocha, which are both over 4,000. I forget the elevation of Antamina, but it could be as high as 4,800. It's well over 4,000. Most gold mines in Peru are, and many of the copper mines are, although the ones in the south get lower in elevation. Now, we do get up higher at Cañariaco Sur and Quebrada Verde, so I think 3,200 maybe. I don't think as high as 3,400, but so what? You know, it's still very low in elevation per se.
But that is certainly not an insignificant issue, because the higher you get, the more it starts affecting your equipment, your people, and so forth.
Exactly. Yeah.
Another really important highlight: connection to the national power grid is planned to be direct line, approximately 55 kilometers from the site, project site, to the Caraquero substation site. So, of course, you need water and you need power to operate these mines. So you're close to power. How's the water situation?
Should have been a highlight there. You're right. We've got lots of water at site.
Okay. That is not an insignificant point in South America. A lot of those mines have issues regarding the water.
A lot of copper mines in the world have issues regarding water. I did highlight it in my quote. I think I'm pretty sure I did, because we usually talk about it.
Okay.
Yeah, lots of water in that area.
And your final highlight: significant potential for discovery of additional mineralization at nearby Cañariaco Sur and Quebrada Verde. Cañariaco Sur is like how close, Joey?
Well, center to center, so pit center of Norte to what is the center of the deposit of Sur is about 2 kilometers. But everything we know about Quebrada Verde, Cañariaco Sur, and then Cañariaco Norte is about a 4-kilometer trend northeast southwest. So you've got
Norte. So yeah, it's right in the ballpark there.
Yeah.
Well, that's a heck of a lot of good highlights. I think you made an important quote in here, and I'm just trying to find it. Just bear with me a second.
All my quotes are on the first page.
On the first page. There we go. It's kind of long, so bear with me. And I quote Joey Fries, President and CEO. We are very pleased with the results of this new PEA, which has achieved 3 key project objectives: a lower initial capital cost, a subsequent project expansion financed from cash flow, enhanced environmental, social, and governance practices. The lower Capex offers many opportunities to finance the project. The focus on enhancing ESG practices led to a single dry stack waste management facility with commingling and co-disposal of waste rock and filtered mill tailings would produce an overall smaller footprint for the project that is further distanced from farming communities. Building on the ESG mandate, geometallurgical modeling of the Canariaco Norte deposit gives a better understanding of the mineralization, resulting in a highly marketable concentrate with no need for arsenic treatment, and lowers the projected operating cost estimate. And she goes on, the 2022 PEA presents an alternative business case for developing the Canariaco project with a smaller initial capex. However, large companies could prefer to develop it as a larger project with a much higher throughput on startup. The Canariaco project offers many advantages. It is reasonably close to key road and power infrastructure, has a low strip ratio, moderately soft rock, low operating cost, and offers excellent potential for the discovery of additional mineralization. The very large database from previous engineering work supports the 2022 PEA, which together could allow moving directly into a feasibility evaluation phase. That's a great point to end your quote on. I end quote. And why don't you talk about that, Joey? I think you kept the best for last there.
Well, based on everything we know about the project, we're looking at going, I shouldn't say it so direct, but directly into feasibility. We have to evaluate all the other studies that have been done and how they fit together. But given that we've already done a lot of geotech drilling, we've done a lot of metallurgical testing, we actually have metallurgical core waiting for next level of testing at the labs. So there's a lot of things we've already done. We studied the EIA. With AMEC, we were doing baseline studies in the area for biodiversity since 2007. So at one point we were able to say we'd already done 80% of the EIA required for an operation. Now we would have to repeat some of that because it depends on dry and wet seasons and of course current, but I don't think that much has changed in the zone regarding flora and fauna. In any event, we've done an awful lot of work over the years, and so now we need to study all of that and put it together with what we've done in the PEA or Ausenco's done, and see how we could potentially launch into feasibility. And that's our goal, is to take this now and say, okay, this is the Canariaco project with Norte, Sur, and Verde. Start with, the idea being start with Norte, which is where all the resource and economics comes from. And
by the way, that resource is measured and indicated, not inferred.
A lot of it, yeah, most of it. You're right. I think it's 53% measured and 30-something% indicated. Only 8% of it's inferred in the mine plan right now. In any event, so look at it all together as the Canariaco project. Push ahead on Norte into feasibility. Engage with SENACE, who governs the environmental studies for feasibility. At the same time, applying for drilling permits in the other two, Canariaco Sur and Quebrada Verde, but move ahead kind of in tandem. So one is would be in feasibility, and the other two are what is called still exploration, but really you're defining additional resources to add to Norte.
Got it.
And copper's in a really good place, as we know, and what's going on in the world for lowering the carbon footprint. And in fact, that's a question I got today from one of the journalists that called, is not your standard questions about an exploration going into development project, but their main thing was what is the significance of this PEA for the carbon footprint of the world? So then you talk about, well, how much copper is needed for electric vehicles and chargers and everything that's going on there.
Yeah, because there's a trade-off there. Yeah, you have to produce it and there's a carbon footprint for that, but then you're helping the carbon footprint of moving from gas to, so,
Yeah. And one thing we haven't discussed yet is that, so the change in the layout brings the plant closer to Cañariaco Sur and Verde. And so, and then it's going to be a big conveyor system that comes from Norte up to the plant. So mitigates many of the trucks that would have been used previously. Not that you won't be using any trucks, you'll be using trucks in pit and also the initial years for between the pit and the waste management facility. But in any case, by being able to convey both waste and what will be ore, then that's huge. And then having the plant closer to Sur and Verde means you don't need so many resources there to make them economic. Not that I think they'll be small. And then being grid power that is most of the power in Peru is hydroelectric, so that's already green. um, and and then the way the whole waste management facility works with the commingling of tailings and the wet, what would have been wet until it's filtered coming from the mill. So it's just many aspects. I think we've been able to really improve this.
all in all, it sounds like you ticked off a lot of good things that would make it a, let's say, a more environmentally conscious operation.
Yeah, and further from the, I mean, it's sparsely populated near us. There's no families living where the copper is or where we want to put any of these operations, aspects of the operation. But having said that, we're also moving further away from where people currently live, and more into land that isn't very fertile.
And I obviously you don't really deal with this in the preliminary economic assessment, but there is benefits economic to a development like this in that kind of a region.
Absolutely, direct and indirect jobs and just benefits through development. We've been involved, as you know, for years in sustainable development projects, helping the local farmers have better coffee, have more of it, their coffee, their quinoa, their fruits, better quantity, better quality, get to market, that sort of thing. And then it's just been beautiful to see what's happened in our community over the last 10 years. The number of people who are managing to get educated and having careers, not in mining, some in mining, but many in whatever walk of life. Over 135 young people are now in university that 10 years ago would have been probably not even finishing high school.
And as more jobs are created, more money comes into the area, those numbers just get better and better. So it's got to do your heart good, no, Joey?
Yeah, the focus right now is making sure everybody has access to electricity, drinking water, good sanitation, internet. And we've been having some very interesting meetings the last couple of weeks with religious leaders, government officials, all sorts of people to see how we can all work together to make more of that happen.
Joey, I don't want to sound sexist or anything like that, but in a way, I'd like to see more mothers and more women running mining companies, because I can tell you're doing things with like a mother thinking about her kids all around there.
Well, I can't deny that. Sorry.
Yeah. Well, that's good to hear, Joey.
Don't forget about the investors. I don't
Safe.
forget about the investors.
Absolutely.
And I'd like to bring up the concept of shared value that was introduced to me about 5 years ago by a group of Peruvians, and leading by Miguel Anchowski, who's now one of our directors. And shared value is really important because it's a closed circle, saying that it's not just take by one side. So if the investors have no benefit, then you really can't look for benefits for the community and the other stakeholders. But as long as everybody's benefiting, then it just makes the puzzle much simpler and makes more sense.
And let's face it, if everybody's happy in the area, it's going to make the shareholders potentially happier as well. So it's a good trade-off. You got to think about that these days.
Yeah.
Joey, we started the conversation out by saying you had to bring a lot of people together to get this done. And that's not just current people. You've been at this for a long time with this project. And do you have any standout people that you want to emphasize to those that are listening and as investors that you want to mention?
Well, as a mother, I'll have to mention my family, my children that suffered all the years that I spent so much time traveling and working so hard, but they're fine. They're doing well. No, let me start with Freddie Wonky, who started Candente Resource Corp with me, and really was a big visionary in his country. We both worked for Arequipa Resources, and he was one of their main geologists, and named the P Arena deposit after his daughter. Not that every deposit is discovered by many people, as we know, but I was there in the early days as a QP and saw that happen, and saw the sale to Barrick. And we were approached by some. Well, I should back up. Sorry. Um, I knew he was a great geologist, and I was also in Peru in the mid 90s when Yanacocha went from 3 million ounces of gold to over 50, or it was the beginning of that. Antamina was discovered. So, Peru really changed from a small mining country, or a country of small mines, to, being phenomenal mines in the world, right? Second in copper, fifth for gold. So seeing all that and loving Peru and the people there, and the energy of the country, I was introducing Freddie to other Canadian investors. And somebody said, why don't you start your own company with him? The two of you start your own company. And at first we were like, oh, well, number one, for me, my children were too young. For him, it was too fresh of, he was working for Barrick at the time, who'd bought out P Arena. But within 6 months, we looked at each other and said, these opportunities don't come along every day. So we started it together, and God bless the people who gave us the first $1 million in seed capital. I can't name them all, but it's been a long story. But as we know, copper mines don't happen overnight usually. And Sean Waller came to join me in 2008, and a huge part of everything we've been able to do so far. He's an engineer, and we had gone to university together. Michael Thick, who we also went to university with, was a very well-known porphyry geologist from Rio Tinto BHP. The Spence discovery was, he was one of the team that got an award at the PDAC for that. He joined us in 2010, and we formed Cobriza because he liked all the other porphyries we had in our sort of stable of exploration. And in the end, we folded Cobriza, or took it back in because the markets were tough. But he was huge in the exploration of Cañariaco Sur, and he passed away 2 years ago from brain tumor, so we really miss him. But huge. And then Michael Castleman, who had come to us from Cominco, or I should say, he was raised in Cominco and was retired when he joined us. But anyway, amazing people that have joined us, and gosh, I could go on forever, but thank you for asking.
Well, and you yourself, Joey, I've been around this business a fair bit, and 25 years or 30 years almost. And I know the perseverance that something like this takes. You've been the leader of the team that has shown that perseverance, and good on you. And I hope it's not lost on people that, as Joey was talking about some of the people from the past to thank, she's always surrounded herself with good people. And I think that goes right through to this report you just put out.
Yes, you're right. I didn't mention Osenko and that huge team, but huge part of opening our eyes to a lot of opportunities on this project.
And that's very important. You kind of looked at it from a different set of eyes that kept you guys going over the last couple of years or so.
Yeah, exactly. Yeah.
Well, Joey, this world definitely needs a lot more copper, not just for electric vehicles, but we've talked about it before, for everything in your life, from this computer we're talking on, televisions, refrigeration, air conditioning, everything, needs copper to make it work. And so congratulations to you and your team on persevering through a lot of tough times. And I think the times ahead are going to get a lot better for you guys.
Thank you very much. I agree. And I'll just like to mention one thing. One of my favorite expressions: gold is money, but copper is life.
And the world needs a lot more of it. So good on you guys, Joey. The most congratulations I can give you for your team's great work and the fortitude that it took to keep going during tough times.
Yeah, thank you.
All right, I'm going to close it off, Joey. Hang around for the end, and we'll have a little chat at the end. So there you go, folks. I started by trying to make, you know, the investment thesis here is that they have a very top-notch project. In the past, Joey and I have talked about how it compares in the top 10 grade and size-wise of undeveloped deposits. They've now done that preliminary economic assessment. And I began by saying that they're only trading for about 6% of their net project value, whereas a recent takeover was at 30% of the NPV. And you're talking about apples and apples there because they were also at a preliminary economic assessment stage. So there you have the recent news, this milestone event for the company, and how it sort of can affect investors. So if you're bullish on copper like I am, and you want to find good copper stories to look at, Candente is one, DNT is their symbol. Go to their website, do your homework. I think they just put out a new corporate presentation, so lots of good data in there that talks about this preliminary economic assessment. As always, my show is for information purposes only. It's important to speak with your financial advisors before making any investment decisions. I always stress how important it is to do your homework, not just on Candente, but also on the copper story, because I think that there are significant catalysts in the price of copper for a company like Candente, and then also this recent news. So I invite you to do your homework and check out Candente, because I think they have something special that is very undervalued.